Good evening, everyone. Thank you for joining us for tonight's workshop. David Tran joins us tonight from H R Block, and he's going to go ahead and speak to us about taxes and the new laws that have gone into effect for this year. So, David Tran. Oh, and I would like to remind everybody to stay on mute and reserve any questions for the end of the segment. Thank you.
Okay, great. Thanks so much. I'm going to go ahead and share my screen and I put together a little presentation for today. Most of it's going to be on the new act that was just passed by Congress and the president and the new aid relief. So I'm going to share that with you guys. So we're going to be talking about the American Rescue Plan Act today. Before we get into that, I do want to go ahead and introduce myself. Like you said, my name is David Tran. I'm an enrolled agent with H R Block. I manage a few offices here in the Glendale, Burbank, and Highland Park area. Been doing taxes for 9 years, and I love it. We do everything from simple returns to complex corporate returns. The company itself has been around for 60 years. So what we're going to be talking about today is, by the end of the session, hopefully I can familiarize you with the American Rescue Plan Act and its and parts of it that might affect you. I'm not going to get into the details of things that might affect small businesses, but things that might affect individual taxpayers. We'll also review your options in receiving your refunds, credits, and stimulus payments, and learn how to take advantage of the new tax laws. So the whole presentation should be about 15 to 20 minutes. I'll reserve some time at the end to answer any questions that might be relevant to you. So, so you know it's been a weird year when you voluntarily attend a session to learn about when the whole point of these tax talks really is so that you can take control of your tax outcome, because I know for a lot of people, taxes is like going to the dentist. So I kind of want to dispel some of the myths and make it a little bit more transparent so you understand how things impact you. So with that, I want to jump right into the economic impact payments, the big one, right? The free money for everybody. Well, not everybody, for those who are in need, right? So you guys have probably seen and heard about the first two and the third one. The first two, the stipulations were if you made under $150,000 and you were married, then you qualify for the whole amount. That's the case with the third one as well. But they did do a little bit of a change where on the first two, the more you made, you can actually make up to $198,000 and still get a little bit of the stimulus payment. But now with the third one, if you make over 160, you get zero. So between 150 and 160, if you're married, you still get a little bit, but if you make over 160, then you get zero. And so this whole chart, really, it's about the filing status. Here on the left side here, we're talking about filing statuses with the IRS. This stands for married filing joint or qualifying widower. This is head of household, and this means single or married filing separate. Sometimes us in the tax professionals, we refer to as married filing stupid because there's really no tax benefit, really. In fact, it actually hurts you a lot of the time to file separately. You're paying for two separate returns. You might be actually paying more taxes by filing separately. So if you were head of household, for instance, you could have made up to $112,000 for the first two and the third one and still gotten the full stimulus payment. Now, once you made over $136,500, then you got zero for the first two. And then if you made over 120 for the third one, you did not get the third stimulus payment. So there's a couple things about this. For the first two stimulus payments, it was based on 2019 tax return, and they automatically sent those out. they also have this website where you can input your information and get your stimulus payment, which is great because that was great for a lot of people who didn't have to file. They only had a little bit of income or were only on Social Security or SSI. And in that case, they automatically sent out the payments, or you could go onto this website and put in your information. For the third one, this most recent one, which is $1,400, they don't have that. The ones for that they were supposed to send out automatically with the Social Security information hasn't been sent out yet. Now, they expect to have it sent out by the end of next week, but we don't know. That's what they tell us right now. So although millions of people have gotten it, millions of people who got the first two still haven't received their $1,400 stimulus payment, even though they qualify. So this credit, that $1,400, now let's say you don't get it for whatever reason, it doesn't come. You can actually, it's a 2021 credit, so you can actually claim it on your taxes for next year when you file. So if worse comes to worse, you don't lose the money permanently, but if they don't get you this year, then they'll get you next year. Now, to increase your odds of getting the first two payments and the third one, you can file a tax return, and we can file it here in the office at H R Block to help you get those stimulus payments that you qualify for. In fact, actually, the other day, I did help a gentleman who was in between homes file for the stimulus payment. We were able to get him one of our debit cards, which were free, and so that he could get those stimulus payments loaded onto there because he didn't receive the first two or the third one. The next thing I do want to talk about is the unemployment compensation exclusion. So if you're like me, I think it's really unfair that they tax unemployment, because if you're on unemployment, you're probably not at your A game at the moment, right? Things are maybe a little bit tough. So I don't think they should be taxing unemployment, but they finally try to do a little bit right by it, at least on the federal level. They're not taxing up to $10,200 per taxpayer for your unemployment. Now, in order to do this, though, you have to make under $150,000, not counting your unemployment. So if you make 140 plus you got $20,000 in unemployment, you still qualify for that exclusion. One thing to note is that you'll see that $150,000 AGI, that stands for adjusted gross income. The $150,000 limit actually refers to if you're single, head of household, or married filing joint, it's all the same $150,000 limit, okay? The other thing is that $10,200 is per taxpayer. So if you are married and you have two people filing, and only one person, say, got $20,000 in unemployment, you can still only take $10,200. You can't take the $20,400, okay? Now, a lot of people have already filed their returns, and some have even gotten their refunds yet. So, and they might be in the situation where they had their unemployment tax. So what, file an amended return. They're going to try to handle this on their own, and they're going to try to automatically send out the refunds to those who have already filed and shouldn't have paid taxes on their unemployment. I will say one thing though, some people, when you factor in taking out the unemployment with your adjusted gross income, that does qualify you for other credits like earned income credit or more child tax credit. So it's something to take note of. And if you've already filed your taxes, it may be worth talking to a tax professional to find out if it's going to affect other things in addition to just the taxes on the unemployment, okay? This is especially true if you have children, because when you have children, you know that children are expensive, and the government tries to offset that by giving you a tax credit when you're making middle to low income, okay? So that's called the Earned Income Tax Credit for those of you who are in the know, the EITC. So that So excluding your unemployment might actually affect that and actually might get you more money from the EITC, which the government might not even calculate. Okay, so we want to make sure that you get the most money that you are legally required or you're legally able to get. So always double check. The next thing I want to talk about is called the premium tax credit. This is also called the advanced premium tax credit. This is a tax credit that you get if you don't already know, if you get insurance to the state of California and covered California, then that's actually being subsidized based on whatever your income level is when you apply for health insurance. So now if you start making more money than what you originally reported, then a lot of times you have to pay some of that subsidy back, right? Because you made more and that subsidy was too much for you. This year, however, that premium tax credit, you don't have to pay it back for just 2020 only, okay? The one problem with this is that the IRS hasn't released guidance to anybody, so nobody's software is actually updated to be able to take advantage of this. So if you are in this boat and you have to pay back some advanced premium tax credit regarding health insurance, then you might want to hold off on doing your return. Unless you really need the money now and whatever refund you have coming, I would hold off because you want to be able to take off that, that premium tax credit payback as much as possible so that you can get your full refund on the first filing. The reason why I say that is because the IRS right now is behind in returns by about 12 million returns. They don't expect to be all caught up until Christmas. So it's a long time from now to have to wait for your refund. So that's why I always recommend get it done right the first time if possible. But if you need the money now, go ahead and file. You might have to pay back some of that premium tax credit when you file now, but you can always amend it later to get the remainder of that. If it's a small amount, then even more reason to go ahead and file now and then amend later. Next thing is the increased child tax credit for 2021. Now, you'll see that it's a 2021 credit, so it doesn't actually affect your 2020 tax. So for 2021, it actually goes up for most people, which is great, but it doesn't affect last filing for 2020, which is this tax season, right? Now, this is more planning for this coming year and what to expect. Now, this increase is only a one-time, one-year only thing for 2021. And that tax credit goes from $2,000 per child to $3,000 per child. And one thing that I didn't have written on here is that now that tax credit is fully refundable, meaning even if you have no tax due, you can get that money back. Before, you actually had to owe some tax for it to get the whole amount. The other part of it is that if you have children who have not reached the age of 6 by the end of the year, they actually qualify for an additional $600, which makes it a $3,600 tax credit. And and you know that. For those of you who have children, and I have twins plus a toddler, they're expensive, much more expensive than $3,600 a year. So I'll take whatever I can get. Now, the credit is actually going to be paid in 2 different parts. So they're saying that 50% of the credit, or half of whatever you're supposed to get, whether it be $3,000, $3,600, they're going to pay half of that to you in periodic payments starting in July of this year. Now, they say periodic payments. I don't know if it's going to be monthly or every 3 months, every 2 months. They haven't actually released guidance on that yet. The language they use was just periodic payments. The last part of this is that normally with the child tax credit, once they hit 17 in the year, let's say they turn age 17 on December 31st, 2021, they no longer qualify for that child tax credit. For this year and this year only, they're temporarily increasing that to, if they turn 17 at any point in this year, they still qualify for that child tax credit, which is great because it gives you that one additional year, right? They're still in the house eating your food. Um, you're still paying for their clothes, all their entertainment. So it's great that they're including that for this year. Now, there are income limits to this, of course. For the increased child tax credit, you get the full amount if you're married and make under $150,000, or qualifying widower, head of household, meaning you're single but have a dependent child, then that threshold is $12,000, 112,500, I should say. And then if you're single or married filing separately, that now, the more you make, the more it decreases until you just get the regular credit of $2,000. Okay. Okay, so the last thing I do want to talk about in regards to that child tax credit is that if you do get that child tax credit for this year, right? And let's say because it's based on your 2020 income, and let's say in 2021 you have a blowout year and you had a banner year, you did wonderfully, business took off, you hit the lotto, you had a great night in Vegas, whatever, or you got a huge promotion or a great job, whatever it is, depending on how much you make, you may or may not have to pay that back. So that's what that means right here when it says safe harbor, right? So let's say if you are married filing joint, you got that whole credit, that $3,600 for one of your children who was under 6, right? If you make under $60,000, right? You're under what's called safe harbor, meaning that even if you made more, you actually don't have to repay back any of that credit. Now you start to have to pay it back when you make over 60,000, and then you have to start to pay it back more when you make over 120,000 with married filing jointly. Okay. And it's the same thing with head of household, married filing separately. So the more you make, the more you potentially have to pay back, whether it's regarding the advanced premium tax credit or the additional child tax credit. Okay. So that is really it in regards to what I think might be relevant to you guys in regards to the American Rescue Plan Act. Now, in regards to why should you choose H&R Block? So we're actually partnering with Family Promise, where a part of your fees to us actually goes to help Family Promise. And in addition, like I said, we're the largest retail tax organization, been around for over 60 years. All our tax pros go through extensive training through the off season, in addition to keeping up with all of the changing tax laws. And there have been a lot this past year. And in addition to all that, of course, we do have the best guarantees in the business in terms of guaranteeing everything we do. So now we actually have, and despite the age of the company, we're actually moving more and more towards the 21st century in terms of offering you different options in terms of how you can file your taxes. You can do it in the office, sitting down with a person with social distancing, as well as masks and barriers to help keep everybody safe. We also have a drop-off service where you can just drop off your documents and then we can do a virtual appointment. We can even do everything completely digitally, where we send you a digital drop-off link and we'll follow up with a video appointment so we can review your taxes with you. So whatever is easiest for you, we offer many ways to file your taxes. So that concludes my presentation. If there are any questions, I can answer them now.
Evelyn, do you have any questions? Okay. Well, I guess that concludes our H&R Block workshop. And those of you who did attend, please email me so I can go ahead and send you guys the code for you guys to receive that $20 discount. And also just want to let you guys know that next week, April 1st, we're going to have Brian Schwartz doing Money Matters, and it's going to be about protecting yourselves against identity theft. And I'd like to thank David Tran with H&R Block, and thank you guys for your support, and thank you guys for hosting the workshop tonight. Have a wonderful evening. Thank you.
Thank you so much.
All right, bye-bye.
Okay. Bye-bye.